Okay, just a couple of emails to go through, and then I'll go through all the pairs. Not much really happening at the moment. Um, One question just online was, um, personally, I for intraday trading work with just the majors, being the um, Aussie versus the Euro. Oh, sorry, Aussie versus US, Euro versus US, cable and yen. That is pretty much correct. Especially when trading on the hourly. Um, I'll only stick to those four, mainly because they're on the hourly. There you get the smaller spread, plus you get the obviously the volatility and the trends tend to be better in those pairs. Although the Aussie is a bit how's your father at the moment, as we can see since September, for almost just over a month. That's really struggling to do anything. The question then goes on: do you work with other crosses, such as Euro Pound, etc.? Yes, I'm limited to the 4 hour. I rarely go and trade the hourly on something like the Pound Aussie or the Euro Aussie. But the 4 hour I will occasionally go into on those pairs. Exotics such as the Nordics and yen and stuff. Rand and Scandinavia. Yeah, I'll leave well alone. I rarely even touch them on the daily, let alone the shorter time frame. But that's just my personal style. I'm not saying that it's right or wrong to trade those, but if you look at the something like this, look at the hourly on that, and it'll be pretty difficult. As you can see, you get these major moves. It's pretty difficult to try and trade that sort of stuff, and that's the Turkish lira. Okay, so let's get into the emails. The first or the latest ones to come in was the pound Swiss. Sorry, first entry was this is all daily trading. Was ideal. Two consecutive buyer bars. I think this reversal bar um, caused the trader to go to break even. I remember discussing this on Monday. It said that was um, managed as best as you could, and you obviously took the risk off the table. Certainly, if you're negative, then you'd on your account you'd be doing that to break even, and similarly you'd be doing it to break even after two consecutive buyer bars. The question has come in that is this being too conservative and too aggressive? Well, I don't think so. Personally, I think whilst this could continue to rally, and in hindsight, you'd say yes, I was aggressive. You don't know, it could have easily come back and taken you out as well. All the way down here at this point, at this stage, all you've done is pay brokerage really, and had little risk on the trade, which is good because as a trader, protecting your risk is the first thing you must do. Limiting your drawdowns is your primary objective. Getting 2 to 5% a month is the target, but your first objective is protecting your downside in terms of your risking your capital. Okay, so yeah, look, the only thing you might have done is, in both situations, is not gone to break even as your first move. Maybe your first move was to move your stop to halve your risk. So in this instance, your stop might come to this point here, and in this instance, your stop might come to this point here. That's a bit of hindsight talking, but that's also I do that on a regular occasion. Is just I've got a reason to move my stop. Two consecutive buyer bars is a reason to move my stop, and that's where I move my stop to is my discretion. I might move it to break even, or I might move it to half my risk. generally break even. You kind of prefer larger moves than that away from the market. So if I remember, maybe that was you were using an ATR style stop on that order. I can't remember, but you want, instances to get your order to break even is large bars like this is when I first got my order to break even. On this order, I'm out of the market now, taking 5% out of that trade, which is fabulous. And it looks like it could potentially keep going, and I'm looking at maybe going in after this 4-hour bar here, which ends in an hour and a half, to take that another little punch higher. But the point I'm making is you want an overextended bar outside of your normal ATR range. If you're using ATR, we can see that the ATR at this across this point here, you're looking at 75, and then this bar is is 120 pips. So that to me would be the opportunity to get you to stop to break even. Whereas what you were looking at is, I don't think it had gone too far enough away from your entry to maybe get at a break even. So this would have been an instance where I would have gone halve my risk. It is a reversal bar, or sorry, you got taken out on the reversal bar. You got 2 consecutive buy bars. Instead of going to break even, just go to half your risk. And then obviously the reversal bar, you would have gone in underneath that, and we're now trading. There's potential that you could be getting taken out anyway by the look of that current bar. There's a bit of resistance up here. So I think you've done the right thing, even with hindsight at this stage. Obviously that can change, but yeah. Okay, then we're looking at the CAD Swiss weekly trend. Fib 1, Fib 2 goes from there to here, and Fib 3 goes from that high to here. It's not the high test. Okay, and you get the 382, 382, and the 50 or 486 all coming in here at the same time as that trend line. That's lovely. And oil's getting a lot weaker. And we can see here we've got divergence as well. From this high to this high, we've got divergence at the same time as you're hitting that rather strong resistance level. It's a good pickup. I've been looking to get long this, have traded it once or twice on the way back up. And certainly there seems to be quite a bit of resistance here, as to what you've highlighted, not only on your weekly, but we come down to your daily. You get that fib cluster zone close to long-term bearish trend line, weekly bullish flag continuation pattern, class C divergence. Well, class C divergence. I'd say it's class B, or hidden divergence. Okay, from this low to that low. Yeah. It's certainly tested that trend line once, and looking at it again, and it's now getting weaker. And if targeting that, I'd go back to the weekly if I was you, and maybe look at a longer target. If you've got your it was monthly, wasn't it, that trend line? Seems to be longer than that. Yeah, I'd be looking at sort of down closer to the 80 cent mark as a potential target. Might be a bit ambitious, but in this initial move. Certainly back under that trend line, getting squeezed in there. You'd have to go with a longer term trend, and this is a reasonable option. Risk reward 1.9 if you use ATR 2.1. Yeah, certainly with oil where it's at, I would suggest that this could play in your favour. Gold price is also due to tank. It's now under production cost, and so is oil's quickly getting there as well. Yep, look, I think that should be okay, mate. How much are you capital you risking on it? $200. Oh, that's your reward. Did it tell me there? Initial risk. Well, I can't see where it says how much you capital, but risk percentage 0.125. Okay. This is with a long-term view like that, you could look at this as adding to it as you get the confirmation. Break below this low would obviously be the initial confirmation of that, and you could look to add onto your trade. That's a good pickup. Okay. Entered the knock long, bounce off 50 EMA on 1 hour, stop loss now moved behind the last ring low, dollar knock. On the 1 hour. Okay. This came in yesterday morning. Another ding in oil price. Well, certainly that happened. Maybe you're in here, I'm not sure. There's no real sort of bounce off the 50 on the 1 hour. Certainly wouldn't have been on the 4 hour either. Entered dollar sec off the 20 EM hour on 1 hour following 2 buyer bars. Stopped out for a minor loss. Okay, I can see that. Yep. Let's tighten stop loss on Aussie CAD. Tighten stop loss after this low test bar. Right. Either way, you'll be out of that now. Alright, new trade idea is dollar lira. After this bar here, the US trade 5th of the 11th today. Higher highs, support of the EMA, horizontal, yes. RSI's in 54, yeah. 2 buyer bars, yes. Look, with this one, you could have potentially gone in yesterday. because of this strong horizontal support line here, which we can see it's come back to test. You've certainly got the buy in there. We had it, and for some reason the lira got a bit stronger. I'm not exactly sure what's behind that. Obviously you didn't get into this trade because there's, this is now lower high, lower low, but there's an option to go in on this bar here above this strong buy bar, because this is where we're expecting the market to turn, and we're seeing that sentiment off this low test bar, and then a buy bar there as potential to trade it there. Stupid mouse. Now though, you'd obviously not be interested. You're not looking at to trade it from here, but there could have been a trade there for a little aggressive entry, and looking at it again above here, but obviously not getting that second entry. So you'd be leaving it alone and managing the first one if you're in, or if you're not in, then not being patient and looking at it. This could have been not getting that turnaround that we are looking for. So hopefully you're not in that. Then we come to the dollar Sing, which also came in yesterday morning. Order for Tuesday the 4th. Sorry, this is Aussie Sing, not dollar Sing. Short trend continuation checklist, yes. Okay. First close under the 50. Gives you the 50 fib being tested, the 50 EMA being tested. You've got a horizontal at 33, 30, 13, 32. Soft horizontal, yes, softish. Certainly is a horizontal. We can see all the turning points here. That's good. RSI convergence, bearish price action, high test seller bar. Yep, high test followed by seller bar. Target price 109.36. Entry price doesn't have it, but you're targeting a 1.272, gives you a risk of 1.6. Okay. 7th to the 10th. But there was a bit of a pullback on retail sales yesterday. I can see this high test bar you're talking about, followed by extreme bearish bar. So yes, you could be in it. You get this engulfing bar thanks to the retail sales and RBA, but I think that'll be short-lived. And we're still out of the money slightly, but you'll be managing your trade after this bar, based on this bar, unless this becomes a huge engulfing bar as well. Your momentum is in the right spot, so all your reasons for entering the trade was sound. So now it's just about managing the trade. That's good stuff. Okay, so literally, if I'm looking at the market, this is the way I look at it. You've got the Aussie there, 4 hour. That's enticing, this high test bar, but when you look at it on the daily, that's the wrong one. This high test bar is enticing, but when you look at it the daily, you go, well, there's really no reason for me to worry about trading, because there's just clearly no frigging trend at this stage. It's not a very friendly market, so it's enticing, but no thanks. Whereas the euro is obviously clearly in a trend, and be looking for an opportunity to short the 4 hour at that point. The Kiwi again is giving us a high test. They had they got their unemployment this morning, which was reasonably good, but it's still price is still failing. Is it in a trend? Well, certainly more so than the Aussie. It seems to be quite a level of support here, so it's not ideal. And you'd also again look at that and say, well, like the Aussie, we're probably more so in a range than anything else. 70, 79.80 to 77.12, 160 pip range. So then you look at that 4 hour and go, is that really worth the trade? The cable itself, as well as, you're getting lower highs, but it's more like a what do they call that? A wedge, descending triangle, than anything else. So again, I'd be leaving that alone, and that leaves us with the euro and the yen, and it's the CAD's clearly trending stronger, but or higher, but there's no cyclicity yet. Yeah. Okay. So going through all the pairs. Pound Aussie. Someone mentioned looking at this yesterday, thanks to the gap and this strong bar, and you could have, but I mean this, it's breaking out of this sort of stuff here, and we've got that kind of wedge looking stuff there, or flag if you like it. There's your pole and there's your flag, and it's looked like it's come back to retest that. Maybe that's your trade. There's certainly potential for it, and if that's your case, you'd be looking to get long at the top of this bar tomorrow morning, and your stop would be under there. If you like trading flagpoles. Weekly, up, down, down. A bit of a support here, which it also seems to be across there, bouncing off. So yeah, there might be something in that tomorrow, and that's your trade idea. It's not the swing low sort of thing that we're looking for in terms of prop trading, trend trading. This is not necessarily a trend trade. This is a different type of breakout type trade. I mean, breaking out of this flag, because the cyclicity is, you could say there is cyclicity, being this is your low, there's your high, and this is another low here. Yes, but to me it's not as clear as clear cut as some others that you can see. So that's a trade idea. Euro Aussie, I just can't buy see myself buying euros. And that head and shoulder pattern over here is still to play out. You've done a cycle underneath the EMA. You've had broken this low here, so this higher highs and higher lows is no longer valid. You almost be looking at this as in terms of there's the upper side of it, and there's the lower side of it as a range. What's that? 46 or 42 is 450 pip range. Maybe it's doing a cycle underneath, and if this is a lower high, lower low, you've got your cycle underneath, and now you're looking at taking it lower. Momentum's in the middle at 47, so it's not really indicative of which way it's going to go. If you follow up, down, then perhaps it is going to go higher. And you got the ECB this week or tomorrow night. Bank of England, if we're looking at this one, I don't think will have much influence because they won't do anything tomorrow night. But the ECB there's a chance that they will do something, and you don't want to get caught in that shit. Just like if you're trying to sell the yen and then all of a sudden they add stimulus. Aussie Sing we've covered. Aussie Kiwi really going nowhere as well. Large resistance here at 13, and quite a big support down here at 10, and even further down at 9. But I do still believe that it should be in around the 120 mark up here somewhere, and we'll get there eventually. But it's a pulling teeth to get there. Some may argue you got a higher high and higher lows. Yeah, I could see that. And then it's a matter of finding the buying opportunity, and it's pretty difficult to do that. But at this stage, there's nothing there. Aussie yen, that's a matter of if you're in it, then manage it. If you're not, then tough. It's looking good on all time frames. Hugely overdone here, sitting at 93. But the yen can do that, and it can sit up there for friggin' ever, and whilst it rallies, especially when you've got central bank intervening. So if you're in that and you're still in it, then there's no reason for you to be out of it yet, unless you're locking in profits. Aussie Swiss, similar to Aussie or Euro Aussie, just read it upside down. Messy crap, this one. It was unfortunate that we were trying to get this to go short. It was looking good for that. Oil price slipping in Canada has made that weaker. Plus, the Aussies stuck in its range, and this is just giving very crappy shit at the moment. So I've no interest in that, and it's because of this crap just stuck in this range. We can see that high as resistance, 88.50, and this low is good support at 87 or whatever it is, 86.50. It's going to take a while to break out of that, I'd say. Okay, so cable crosses, as I said, the BOE is unlikely to do anything tomorrow night. Data coming out of England is still okay to weak. I'd say it's probably in the middle of the road. They did peak last year, earlier in the year. A lot of this sell-off though is unwarranted, and I expect a stronger pullback. If it breaks through $1.60, I thought it'd go further lower, but it's hanging on to it for dear bloody life, and you might see a bit of rally in this leading into BOE, but it's pushing up against the stronger US dollar, and that story is still playing out. So if you like the cable, you might find opportunities against other currency pairs, especially the weaker ones like the yen and the CAD, and to a certain extent the Aussie, and we've discussed that. Against the Swiss, as mentioned, we sort of covered it a little bit, that there's some resistance here. I prefer to be long this than trying to short it. I wouldn't be looking at that as an opportunity to short, purely because of the European weakness, and the Swiss will get caught up in that. So they're coming up to some sort of vote in Switzerland. They're basically the media and the public want the Swiss National Bank to change how it holds assets and have a certain percentage of them in gold, which would make it very difficult and expensive for them to maintain the floor they have against euro, being at $1.20, and we'll cover that when we go through the euro costs. But that vote is coming up. I think it might be November 20th or something like that, and so that floor may be moved. I was always the belief that they might move it higher from $1.20 to $1.40 or something like that, but they may drop it to parity if they are forced by the vote to change how they hold their assets. The government and the SNB don't want to, obviously, for this to occur, but I think it's a referendum that they may be forced to do so. So yeah, I'd probably stay out of the Swiss until that vote's over. Pound CAD is tricky. You got support and resistance lines. Excuse me. Everywhere here, and it's really tough to, like the Aussie CAD, to find a trade. So I'm not too much in love with that either. Pound yen, as I said, if you this is a good one. Playing the UK strength against the the Japanese weakness, similar to the Aussie. If you're in it, manage it. You might be out of it because it's hit target, and you might, if you are out of it or not in it, then you're looking at the shorter time frames for potential opportunities. But there's nothing there at this stage. Against the Kiwi, there's nothing really there that you want to do it. Similar to the pound Swiss, I'd like to be, you want to play this from the short side. There was an opportunity there with this little ring high, and you may have your stop at break even, or if you took it off this one, like I know a few of you did, then you certainly should have your stop above this reversal bar. You've got both the ECB coming out on tomorrow night, and as I said, and the BOE the following night. So, the same night. So you might be looking to sort of protect your profits by getting your stop above that. Is there an opportunity for those who are not in it? Maybe, but you're not going to trade the 4 hour just before the central bank. Okay. Pound Sing, sort of flirting with that horizontal I had on there. I had a horizontal there for some reason. This swing high here. This phase 1 failed to make a lower low, so perhaps this is not the ideal thing to look at trading. Momentum's getting to the top side, so it's unlikely to continue too much higher. I read somewhere that recently the Singapore government is looking to put stimulus to compete with Japanese, because the Japanese are obviously major competitors in the Asian region for business, and Singapore are struggling to compete with after Kuroda's stimulus. So they're looking to weaken their currency to compete, and obviously weakening their currency would make this go higher. And you combine that with a reasonably strong pound, this may look to be rallying higher, but I would be leaving it alone until you get a push higher, and then a retest of this and a cycle above this horizontal level and the 50 EMA, which is about the same price, and wear off a bit of this, and get momentum back down here, and then take it higher. But at this stage, it's quite a few days away. Danish kroner, why would you bother? It's only 25 pips, and that's why I don't trade the short. Try and trade that on the hour for 25 pips. There's no point. We're certainly coming back to look at that horizontal level. Yeah, I'm not going to trade any of those currencies. NOK, obviously the Norwegian kroner is getting nailed because of oil price, and this is similar to the yen. If you're not in it, then tough shit. You have to look at the shorter time frames, which good luck trading that when you've got about a 30 pip spread. I would have thought even higher, a 60 pip spread. So hugely overdone. I wouldn't try and trade against that trend. And that's, again, can be okay, but it's starting to look a little tired, and this is just messy. Prefer to trade off the 50 than out here. Against the lira, maybe range trade it. Certainly support across there. Resistance here or here. Might have looked at it off this bar here. Again, the lira, like we looked at the dollar lira, had this turnaround, followed it. It's not there yet, so yeah, it's tricky to sort of try and jump in it now. Possibly you wouldn't. Well, I wouldn't anyway. Okay. Into the euro crosses. Euro dollar we've discussed. Have we? No. Well, good cyclicity. You'd expect some. Come back here and maybe find some resistance there. Look at the weekly. The reason why I had that up there at 27 was because of those lows there. Maybe it'll get up to that and get short. Certainly broken out of that wedge there. This is going back to the noughties. And then this is 8 years later, naughty 08, and we can see it's getting squeezed in there, sort of broken out of that, as you can see, and it may come back and sort of retested that. So Draghi's certainly not going to try and strengthen the currency, but similar to what happened with the US dollar. This was the rally to FOMC. You might see a rally to the ECB, and then find a shorting opportunity on Friday. Euro Aussie, as I said, I'd be looking for a shorting opportunity rather than buying. You've had 2 cycles above, then a mini cycle underneath making lower lows. So you've got a high here and a low here. So it's not something that I would be advocating as to getting long. You guys still with me, or have I just lost you because I've lost connection on the Axie Trader? Clear? Okay. Oh, Axie's just dropped out for some reason. EuroCAD. Yeah, look, certainly found a strong point here. I still believe the CAD will get stronger. And it has been getting stronger for several months, as we can see, since February. Certainly against the euro, which is shithouse. The problem with the CAD is the oil price is getting absolutely monstered. Economically, they're doing all right. They're not on fire, but as the US continues to strengthen, they will feel the benefits of that. So fundamentally, I'd still be looking to take opportunities on to get long CAD when I could. Obviously now with the oil price heading into the 70s, how far will it go? It's not going to drop down to 40. I can't imagine that. I would expect a bounce around 65, 70 in the oil price, and maybe that will then get the buyers back into the loony. But in terms of this right now, you're not going to really be looking at this when it's in a range like that, as you wouldn't look at the Aussie dollar. Certainly large resistance here, and there's also large support. So until it breaks out of those ranges and does either a break and retest on the upside or a break and retest on the low side, I'd be more inclined to stay away from it. Euro Swiss, as I mentioned, The floor here at $1.20 is under threat because of the SMB's vote that's coming out. I think it's a referendum, and you know, however, until that vote is heard, $1.20 should hold. Case is what happens if the $1.20 doesn't hold, or sorry, the vote goes through and they have to offload a lot of their currencies and use it to buy gold. Will they be able to financially support $1.20 position? Maybe they will, maybe they won't. And that is the question that the market's obviously asking of the SMB by bringing price down to $1.20. Obviously, in the oversold territory, until we find out what's going on there, I'd advocate staying away from maybe trading this. What is the code for oil? Well, knee signal, I'm not sure. Most things have it as WTI. If I bring up, let's just have a quick look on stock charts. WTI is generally the oil price. I'm not sure what it is in e-signal if you got it, but there's oil getting absolutely smoked, and it's hugely overdone, and you probably expect some sort of bounce around 65 or 70. They say production is between 70 and 80, and that's why it held on 80 for several weeks, but it's underneath that now, down another 1% overnight, and did get to a low of 70, yes, 76, underneath 76. Yeah. SNB. Swiss National number of shares. Yeah, Swiss bullion vote. Let's try and find when this vote is. Okay, referendum from November 30. Recent polls showing voters undecided. Central banks. Oh, you mongrel thing, come back. Alright. Central banks hold gold as the target of an initiative that would require the SMB to hold at least 20% of its total assets in bullion and never sell any. So that would make the Save Our Swiss Gold initiative, right, has ballooned by more than a third due to the currency interventions of wages of $1.20. Referendum initiated by a few members will argue it will help preserve national wealth. Suffered a 9.1 million franc loss due to a drop in the price in gold, forcing it to scrap its dividends. Yeah, so I know they also made 80 billion, and they lost 9 billions, but they made $80 billion in defending that floor at one point. So yeah, November 30 is the date to watch. Be careful of the Swiss yen up until that date. Okay. Okay. Euro pound we've covered. Euro yen, like other yen crosses, if you're in it, happy days. Manage it. Might be out having hit a target, but two strong buyer bars, you'd be, or even a low test bar there, be trailing your stop, and you might get trailing it aggressively because of this, hugely overdone. But if you were trading this as a range trade, it certainly got to your target. Euro Kiwi, just Yes. Why the hell would you want to even bother looking at that? Euro Nov. Yeah. Again, a range trade has certainly hit your target, and oil price is weakening the Norway side of this faster than the Europeans are degrading. Leave it alone now. Polish. Again, it's just messy, isn't it? Not that I know anything about what the hell goes on in Poland, but oh yeah, that's just, I can't see anything in that worth trading. And similarly, this is just difficult to get entries in, and and difficult to manage. Just look at the way you're in, and then you're trying to manage a trade. It's extremely difficult, and it's not something that I'd be wasting my time trying to do. Yeah. Well, this one's obviously broken out of that range. There's no divergence if you're trying to counter trend trade it, or even maybe range trade it back up to the other side, but maybe look for a cycle underneath the 50 to take it lower. This one, not quite divergence, it's still convergence, but again, good cyclicity, fabulous trend, fabulous cyclicity. Expect this to come back up to here, and you'd be looking at it sort of off this level there, as a potential shorting opportunity, if it gets up there over the course of ECB. Again, very similar to the US dollar, but as I said, there is some concerns about the Singapore. Are they going to add stimulus? Well, the Europeans should be doing it. Singapore doesn't have the issues that Europe has, and so you'd be looking for shorting opportunities, but there's no real with the ECB coming out, you'd stay away from it. But unlike the Euro US, you're not getting lower lows than the Euro Sing, and that may be something to consider. Ruble, stay away from it, alright? And same with this one. Look at that, that's just, fucking, I don't even know why I have that there. Go away. Hong Kong dollar, similar to the Chinese currency in that it's hugely influenced by it. Again, it looks almost identical to the US. Euro US, no divergence and no counter trend trading. You might look for something. I'd always just go to the Euro US. I'm not bothered with this. And same with, I don't know why I've got that one. Leave that alone. Okay, quick exotics. You got NOK/SEK. Well, that's toasted, isn't it? Lower highs, lower lows. I know one of our punters had bought this and was trading it as a phase 2. I hope she got out. It's only got through that level in a real hurry thanks to oil. If you're in this and short off this ring high here, well done. You've certainly got 2 consecutive seller bars to get your stop to break even, and it may have even hit your target if you're doing something like 1.272. Yeah. So oil price, fun. Swissy again, it's just okay. You've got a cycle and you've got this little bit of buying, but with what's coming up, I know it's it's 3 weeks away, and you might get out of the trade by then. But I've got NOK/SEK twice. To me, this I'd see charts like this and I go, how can you pick an entry, and then how can you manage it? And I look at that and I go, with great freaking difficulty, so I'm not interested. And similar, very difficult to sort of try and get anything going on this pair. And so why the hell would you worry about even looking at it? No thanks. This one is a high or low. Is some cyclicity in here. It looks a little bit easier to try and get entries, and certainly a lot easier to manage than the previous pair. We'll get some large increase in volatility here, and as you look at the ATR, it'll be running higher. Yeah, you can see the ATRs normally down here in the what's this, 60 pips, and it's now running into the 100 pip range. I wouldn't be interested in this. You may look to take it longer if we get a cycle above it, but again, I can find easier trades elsewhere. Don't need to be trading everything. All right. Great cyclicity, similar to the dollar Swiss. A bit of support here though, exposing yourself to two central banks, being the Swiss and the Sing, that are going to be struggling soon. Maybe walk away. And yeah, again, this is traded this run up because we'd broken out of all of this crap with this move here, and we got that ring low and traded that higher. And since then it's just been not something that I've wanted to be involved in, and I still don't. That's okay. You've had a lower sort of cycle underneath. Fuck it. No way. And this one we kind of discussed in terms of the monthly or weekly that the gentleman showed us. There's Fibonacci clusters here that should be aware of, and the market's struggling to get through it. Oil price tanking. Again, Canadian central bank's pretty stable. Rates are at 1% and staying there for a long time. The economy's it's not stagnating. It's just puttering along. It's not on fire like the POMs were 6 months ago, or that the US is now. But it's certainly not on struggle street like the Europeans and the Japanese. So that's why I kind of like the CAD, but the Swiss is caught up in Europe's bullshit, and now they want to bring back their gold. It's going to put pressure on the central bank. Right. Quickly going to the yen crosses. Dollar yen inside doji bar closed nowhere. Another inside bullshit bar at this stage. Looking at this shorter time frame, perhaps to maybe get an opportunity. The hourly sort of wearing itself off. You might find something in the next couple of days across there. I know Kuroda is talking that today, I think. CAD yen. Interesting. Oil price is really hurting this pair, but nailed that same high, didn't it? Yeah. Support there. Yeah, if you're in this, you'd look to get out. Certainly have your stop underneath this horizontal here. It's at 99. That large resistance there at 101, and it's overdone. And oil Okay, question. You look at this. I took this. I took the Euro Swiss log back in September. What would you suggest, given the referendum later this month? Is it worth hanging on or just getting out? Well, the sentiment is certainly going down to $1.20. I'd be inclined to stay in it, but the risk is that if it does move, if it does, the $1.20 floor does disappear, and the referendum comes through, and they do get their want their gold. There is a chance that that floor could disappear, and that the volatility in the market trying to find a new floor or a price, your stop could get slipped quite drastically. And that's something to be aware of. You know, if there's if you look at the Euro Swiss, and you might say, well, I'll just take the loss on it at this point, and I'll get in after the November 30 again, depending on the vote, rather than carrying that risk. If your initial risk was $100 and you lose 50 on it, it's probably going to be a hell of a lot cheaper than if they do get the vote through. Then that $50 could end up being a $200 loss if the market gaps, and it may not rally all that much off the vote to you be able to sort of make it worth your while. So there's the sort of things that you need to consider, and it'll depend on how much you put on it, and if that loss, they will stop you out, but there is a potential that it could be more than what you actually risked. And if your account's sort of down 4%, you should certainly look to get out. If you're only down 1%, you might sort of run that, but that's up to you. That's sort of something that you should consider for your own purposes. It's hard for me to tell, as I don't know where your account's sitting at this stage. Swiss yen, yeah, like the euro yen, it's getting up there. You might look to get out, but certainly trail your stop more aggressively now that you're way up here and you're getting towards resistance. You should be looking at saying, well, let me take my profit, had a good profit, and look to get out of it. I've covered that one. Aussie yen, I've covered that one. Mexican yen, really, trail your stop. Certainly underneath that area there. NOK yen, it's a battle of who's the weaker, oil or the BOJ. So, I'm not interested, really. Same thing, getting overboard. You'd want to start looking at taking profit, either partial or fully, or getting aggressive on trailing your stop. It's certainly overbought and it's coming up against resistance. There will be a pullback. It may not be extensive, but there will be a pullback. If you look at, let's say, that was a nice run, pullback, and then that aggressive run. If you look at the last time they got involved, which was back here, we saw that aggressive run. Yeah, this is the last time the Bank of Japan announced any sort of intervention. Okay, this was their first meeting after changing hands of which political party ran the BOJ, and after their first meeting they announced that they were intervening. We can see it had a strong run. It went from sort of 92 to what was the low there? The low was 92, let's call it 93, and it ran 300 pips and then ran another sort of 300 pips, but it pulled back. So you will get a pullback, and you should start looking at locking the profits in at these areas on any of these pairs, and then getting in again on the pullback. Certainly overdone. Turkish lira, they're all the same. Okay, they're all going to be the same. Your account's at 1.5 negative at the moment, and talking about your Euro Swiss, yeah. Well, so if you'd risked 0.5%, on the trade, it could well be that you only lose another 0.5%, which means you're down 2, but it also could mean that you lose a full 1% because the slippage of the market, which would take you down 2.5. You know, I don't know how much you risked on the trade, but if it was a 0.25%, and you're looking at now saving that, so you save an eighth, then I'd get the hell out, because the downside risk is higher than the upside gain at this point on that trade. All right, good stuff. Dollar China, nice little cycle underneath this 13. Dollar one, the 4 hour did a high test on it a while back. It's come back and tested again, and certainly continuing on. Getting a little overdone at this point, but in the daily, you might look at it on the daily in terms of trading, having a stop above 13. Look at there. There's not much left on the momentum though. It's a tricky one to trade because it is pegged to the US. The US is getting stronger, but obviously the Chinese is also attracting a lot of investors, so it's a tricky one to trade. We've covered the Aussie, Euro, Pound, Kiwi we've covered, haven't we? Yeah. That's bullcrap. Yen we've covered. Dollar Swiss. As I said, it's like the Euro, but it failed to make a higher high. Unlike the Euro, you got a double top here, and you got major divergence from cycle to cycle. You might look at that and say, well, perhaps I shall short it. Fucking good luck shorting against the USA. Not something I'd do. I prefer to be trading with the trend, and the trend is clearly up. CAD is, yeah, you couldn't really, at this point you had a two seller or inside high TEFs bar, which you're not going to trade on. Then you had this bar which was overextended and ended up being a doji, which you're not going to trade on. And now it's running. It's something that is ideal, although it's a little overdone here. If you look at perhaps your extensions and go, well, it's potential of getting into the $1.15 area. Well, then now there's the opportunity to start looking at the shorter time frame and go, well, can I get the cyclicity off that and target $1.15? You can see it. You might have to put something like the 20 EMA on it to get that. You can see the cyclicity, and that's you might look at it like that because it is trending. Yeah, daily is gone, and well and truly that long-term fib I had was from here yeah, and you could also potentially have that high, that low, and so that's where you're targeting the 61.8 off this high, and also the sort of 382 area off this high is something that you should be targeting on this. But if you get in here on the daily, where's your stop going to be? Where's your protection? So that's why you look at it jumping in on the shorter time frames. What do you mean by being pegged to the US? You mentioned the Hong Kong being linked to the Chinese dollar. Well, it's because the Hong Kong dollar, I don't know much longer that's going to be around. Hong Kong is now owned by China, and so they're obviously heavily influenced by that, by them. Hong Kong is a Chinese port effectively, and it always has been. They obviously have a huge financial industry and legal industry that sits outside of China, literally on its borders. But it is China controlled, and Shanghai is quickly overtaking Hong Kong as a financial centre. So the future of Hong Kong I see is limited, but a fun city to go and visit. But as a port, it's important and will remain important. Um, and so that's why I say it's influenced by the Chinese. It's not pegged to the Chinese. If I remember correctly, there is a partial peg to the US, as the Chinese have a partial peg. So when I say a partial peg, it's a portion of their currency is literally pegged to the US. So it's for every move the US does, then their currency does a portion of their currency does the same. And what that portion, I think it's 21%, something like that. And it's a little, it makes the sort of trading it a little difficult. Yeah. Dollar Sing is, hey, oi. Sorry. Um, yeah, Dollar Sing. We've kind of discussed the Sing in terms of its potential weakening of their currency. It's not out yet, but US dollar here certainly getting nice cyclicity. You're not gonna. I wouldn't trade against it, but I'd be looking for an opportunity to get long it. If we get a bounce sort of off a reasonable support line and Fibonacci. The US dollar story is far from over. Yeah, I can, but I'm in Australia at the moment, and I'll be in Australia until the end of next week. That's my Aussie dog, going a bit nuts. What have I got here? Dollar rand, gold. Gold's getting smoked. Gold will probably continue to get smoked, which weakens the rand. We've got a nice little cycle here, off a support line. I know some people were looking at this earlier in the week because it bounced off this engulfing bar, reversal bar, and then looking at. Oh, is this the one that you were looking at in terms of the ATR stop? Yeah. How you're not going to trade with that kind of huge bar there, but I'd still look at this and say, well, there's your target around these highs here. Maybe look at it in this format, get the 4 hour and run it up there. Issue on that is you need to take this into account. That's tightened up to 60 pips. That's all right. You need to take that into account and perhaps have your stop, at least 70 pips underneath the swing low. Because if your stop loss is at 10 pips underneath that, the spread gets to that point there. Sorry, the price gets to that point there, you get stopped out because you're only 10 pips below that. Yeah, the spread will take you out. So do consider that. But yeah, you'd expect that to continue higher as gold weakens. Peso. I did trade this once. Can't remember which rally. I made a little bit of money. I think it was off this and got the hell out of it. Again, these you see these huge bars like this. It makes it so difficult to try and manage your trade. And so it's not ideal for trading, and that's part of the reason why you might take long-term views of just go, okay, I'll get in and I'll have my stop way down here, and just trade the long-term view of going higher. But you know, trend trading or phase one trading, you're not going to bother with it. This one is a little better. Again, the oil price has obviously seen this rally, and remember that I showed you the oil price or the fall in it. This against the NOC is obviously continuing that. No divergence, and no looking at a trade now, even in the shorter time frames, because you're hugely overdone. Not much I can say about that one. Now got convergence. There's no divergence. I'm not going to trade. I'm not going to get long the friggin' Poland against the US. I'm not going to get long Russia against the US. And still no divergence. Again, no divergence. We do have all these swing highs, but I don't see divergence. We might end up just like this. I discussed it earlier. Danish kroner. There's divergence, but that's from cycle to cycle. Yep. Again, I'm not going to. I just see these kind of price action as a potential to get long the Hong Kong dollar. You can see fuck all happens in that. Thai baht. Yep. Why would you? And Romanian, again, why would you? There's no reason for us to trade out there. Okay. So that's it for the day, guys. All the pairs done. Not much out there at the moment, other than sort of maybe finding opportunities in the shorter time frames. We've got some decent trends in the euro. You've got some decent trends in the yen. Seems to be something like that in the Kiwi, but quite, it's also a bit range bound. And you've got a decent trend in the CAD. So the cable, the Aussie and the Kiwi, I'd find difficult to trade. And 87.50. You're not going to go for a big run. If you're going to get in these things, you're going for sort of 20-30 pips. But you find clearer sentiment in something like the euro, the CAD, and the yen. And other than that, there's really not much to look at on the daily at this point, unfortunately. So that's it for the day, guys. I shall see you on Friday.